Good morning, traders. It is June 12th, 10:02 a.m. Eastern Time. Welcome to another video with Digital Goatz Academy. I'm your host, Antoine Farrar, and welcome to our live trading segment. So let me go ahead and open up the charts right here. So if everybody's noticed the difference, you can kind of see that I'm actually operating off of my iPhone, and I actually wanted to start using this option. One, to show how hands-free in a sense trading is, you know what I'm saying? That I'm able to now this stuff has already been, created off of my laptop. But like I said, I'm showing the ingenuity of just looking at the charts from your iPhone and showing that you can trade on the go. You know what I'm saying? This information is relative to me. So I could use this information when I'm going to the mall, I'm going to get something to eat. Like that's just how powerful trading is. But hold on, guys. Let me actually make sure I'm sharing my screen because I'm not. See, learning some of the faults of me being on my phone. If you're tuning into this video, make sure you hit that like button. Make sure you comment and subscribe as well. And let's get into our live trading segment. So, of course, first thing I'm gonna talk about is S&P or anything industry related. So, what happened yesterday is that we did have a big bullish move. Let me push down to the hour time frame. So, if you can see, we did have a big bull move yesterday. So I'm not sure if my cursor or if you can see the crosshair is showing on my screen, but you can see that we had a bull move from Tuesday, and then it continued. It continued to push up yesterday. So this was the pullback around 1300 yesterday. I mean, not 1300. Well, 1 p.m., but 1300 for my military people, right? So the market pushed up around like what was this? Wait. Oh, that was 1 a.m. I'm sorry. That was 1 a.m. It retested at 1 a.m. and obviously it did its pullback around opening bell. I think that was 8:30. No, 8:30. So CPI data is what we had yesterday, right? So CPI pushed the market up, and as opening bell opened up, it pulled back and then it started building resistance, as you can see around 6,053. The market pulled back around 1,300. I think that was the 11. Yeah, okay. The market pulled back around 1,300, and then there was some more data that came out around 2 p.m., which pushed the market down all the way back down to our consolidation area. Now, I didn't expect that, but at the same time, because we still have these markups like left over, we can still use this information to benefit us. So I did get taken out in a position because I thought that we were gonna push from 6,000. So I closed it out. I didn't have to close it out. I just didn't know how deep it wanted to retrace. But I did take a position closer to the top of the consolidation zone. So what we're seeing is this a pullback into that consolidation zone. So you can see that what we've been seeing overall is that the market, anytime it's been a push down, it's been a push up, right? So right now we're still waiting for data to come out. There's a lot of news data that's coming out in the next hour or so. So that could make the market react by doing like aggressive pullbacks. But I think this is the buy move. I mean, let me just look at the Hakanashis. You know, I like going to my Hakanashis. So I like that. And again, what we've been talking about, I like viewing it from the hour because it just gives, at least at a minimum, a stronger time frame that the market is responding off of. So you can see again what we talked about yesterday, and everybody will have the videos from the previous days today. So I'll make sure I push all that stuff out on YouTube. But yeah, what did we say? What do we need? What do we need? We need flat bottoms. And this is consolidation. I like that there is a doji here. So the doji was made around 8 a.m. today. So I like that a doji was made. And I like that 10 o'clock going into, what is this? 9 o'clock going into 10 o'clock. we've been bullish on the Hakanashis, but also representing strong momentum because we have these flat bottoms. Again, flat bottoms and flat tops are represented by not having a wick. And so that almost guarantees the momentum that the market is going in that direction and stuff. So yeah, you still have news data that could bring like a whole candle on the opposite side, but this is the stuff that you want to see. It closes bullish like this, more than likely it's going to open bullish the next candle, the next hour candle. Now you run into, is it going to start consolidating around those certain time frames of like 10:30 to like, or 11 a.m. candle into like 12, and then maybe do like a pullback. So I mean, these are just things that the market does, but you don't have to like overcomplicate it. This is what you want to see at first, because again, our bias is that we're still bullish, right? So this is what we want to see at first. And we do want to see more candles like this on the hour time frame, getting stronger and stronger, or just continuing to see green candles or blue candles, whatever you have for yourself. I mean, whatever color you have, like for your charts. I know some people use blue. So let's see. And you can see the market's kind of like at a standstill. Why? Because it is waiting on the data. So it's waiting on the data to filter into the market. But on top of that, we've already discussed this, that the buy is going to be slower than the sell. But when the buy takes off, it takes off. Just even look where we've come from. You know what I'm saying? Like for for people that are probably, or for traders that are still confused, like look where we've come from. You know what I'm saying? And it's not going to be clear as day, but look where we've come from. Like, yeah, as far as the market, you know what I'm saying? Like even just from what happened March, like this is the move from March all the way down here. If you can see my crosshairs, all the way down here. Like, look where we've come from. Like, these are big moves. We're already back up to almost the high, but the previous low of that consolidation area that was created around, like, I think January going into, yeah, January going into March. So look where we've come from. So like we just have no choice but to believe until like we get like a strong move to the downside that we're still bullish. Like these have been powerful moves for indices. You know what I'm saying? So we do want this candle obviously um, within this 8 hour. Well, let's look at the daily. One thing I did notice is that the weekly candle, it turned bearish like maybe for like a couple hours. That's what I was focusing on, was how the weekly candle was going to remain. So you see the weekly candle currently, it's in a form of a doji, but it's still remaining bullish. You know what I'm saying? So the next move, if it closes, well, I don't want it to close like a doji. I would prefer it to close stronger or start getting momentum to fill that gap. I mean, to fill that wick in. But if it does close like this, then the next move will probably open up like bullish. But there's a possibility that the market could try to pull back a little bit lower if this is a doji candle, because that's just normally how I see the market respond when it creates this type of pattern. So again, putting my sentiment on my experience as a trader. So yeah, it's above this gap. That circle was a gap that I marked, but I only mark that when it's a different gap. It's a gap that actually fills the market pretty fast and then runs away from it and then fills it again. So the fact that it's above that gap, I like that. So I think that it's still maintaining the bullish momentum that we want to see. That drop was way more aggressive than I thought, but I think it was probably like a necessary move. But any drop we've been seeing has just been a push up. Once the data starts filtering in, we look back and we're like, oh snap, man, the market, the only thing it did was pull back. But when it's doing it, it doesn't seem like that. It looks like all hell is about to break loose. So again, the buy is going to be slow. It's going to be tricky and stuff, but look how far we've come from. So we have no choice but to believe that we're still buying unless the mother of all bear candles just comes out. And it doesn't look like that because this market just doesn't do that. But also, that would be a major loss for it to do that without creating like these smaller candles. You know what I'm saying? Like on a weekly time frame. So let's look at US 30. Actually, let me look at Bitcoin real quick. I didn't check Bitcoin this morning. It's at 107K. So the high that I saw that it did create was 110K. So Bitcoin is telling you, man, I'm trying to go up. I'm trying to go up. That's what it's almost guaranteeing us, that it's trying to go up. So same thing with US 30. It did blow through that area that I discussed yesterday, and you'll see it when I drop it on YouTube. That it went lower than that previous zone that I was looking at. So this blue zone where I said previous high tested, it dropped lower than that in order to fill a position, but it still was in an area that I had already marked up. This was another gap. Where is it at? Oh, okay, the purple. I changed the color from black to purple. So that was another gap that I marked up that the market did, I think last week or the week before, where this push down happened. It faked out, brought the market down, and then now, we're above that. So I didn't think that it was going to come back to that gap, but it just makes sense. So it did come back to that gap, which means that we're still maintaining that bullish momentum. I mean, we're still maintaining that uptrend. Right now, it's just consolidating, and I mean, it looks ugly. One thing I did notice is that over here, let me see. I'm gonna just draw it real quick. I don't want to keep it there because I don't really need it. See how this candle, how those bear candles look right there? I'm not trying to illustrate a gap. I mean, that could be a gap. But just right there, you see how that bear candle, like that just looks different than the way that the market normally forms. So that caught my eye, and I felt like that could have been a gap that I just wasn't paying attention to, and I felt like the market was going to be attracted to that. So, just looking at this pattern right here, it looks like we found support, or we just found, the previous high. We're bouncing off of that, and then we're going to continue our bullish trend. And I like that it is creating these wicks when it's pushing down. That's something that you got to pay attention to. Looking at US 30 or S&P 500 is like you want to see it close with like wicks and then like a strong body because it's guaranteeing that it's denying that area. You know what I'm saying? Like it's saying that I don't want to go down there at all right now. So seeing the close and then seeing the candle be the color that you want to see, which is blue or green, and closing strong, like yeah, this is exactly what we want to see. We wanted to keep it up. This is the 4-hour candle, so this is a pretty strong move, but we wanted to keep it up. Let me see what it looks like on the hour. But the same thing with US 30. We broke out of this. Well, we did a fake out. We faked out to the top of this consolidation, but US 30 on the hour time frame, you can see it even more clearly than S&P. It definitely went to go find support. And this is like the third time that the market touched. And how do we know that? Let's turn this to a line chart and you can see the structure. So again, hopefully y'all being able to see my crosshairs. So right here, that would be, hold on. That's Friday, June 6th at 12 p.m. There was a valley. So it was a dip in the market. 9 a.m. on June 9th, another dip. And then today at 7 a.m., that was the dip. Well, I guess you would say 6 a.m. was the dip, and then 7 a.m. was the turnaround. But either way, what I'm pointing out is that these are forms of structure that is confirming what support. You know what I'm saying? Because I mean, it's literally supporting it. We're above the previous high, and the market did one more dip, which is I actually talked about this in one of my older videos. If I can find it, I'm gonna try to tag it where I have this concept, and I learned it from another trader about like Publix. I don't know who y'all use for your grocery store or what you have local to you, but I would assume everybody has a Walmart, maybe familiar with. So look at Target, Walmart, and let's just say Publix. I think that's nationwide. As far as like across the board, evenly in the charts, right? In this scenario, let's just use Target and Walmart. That first dip is at 12 p.m. That's Walmart, right? That's where they're buying, and their prices go up, so their earnings go up because they bought at this price, so they're making money. The market comes down again. Target takes an opportunity to buy into the market or to buy their produce. Market goes up, keeps going up, goes up high because they're making money. Then the market drops. But you know who takes advantage of the lower drop? Harris Teeter takes advantage of the lower drop. And you see it being reflected in their prices because Harris Teeter is more expensive than these two. You know what I'm saying? Like naturally, if you know what a Harris Teeter is. So I have a concept behind that. You know what I'm saying? That when you see the market do that, you can kind of formulate, okay, Walmart, Target, Harris Teeter, or whatever else the expensive grocery store in comparison to these two that you have locally to you. But that's just, you know, if you want to use that, you know, I'll do a video going more in depth into it. But I think I have, like I said, I think I've discussed this freely before. But if we need to revisit that, we'll definitely do that. Oh, I guess that was a gap right there. Oh, I haven't used that in years. But yeah, we're just waiting for the market to do its thing. Like it's straightforward. It ain't it's powerful, but you know, it ain't like moving like we would like to, and that's how the buy is gonna be. But again, I've already said this, traders, you're gonna look back and be like, I can't believe S&P or US 30 went to 50K or 7K by like maybe going into next year. You know what I'm saying? Just like because it's like this. The buy is going to be slow. It's going to build momentum, you know what I'm saying? But it's also going to allow people to invest in. That's also going to add influence to the market, which is actually going to boost the market in equity. You see what I'm saying? So, one, we're still playing to that freaking inverted head and shoulder. That's what I like to see. If you look at it on the 8 hour, so on US 30, we're still playing to that inverted head and shoulder. I don't think things are going to change unless it literally wants to come all the way back down here and make a right shoulder. And let's not say that, but just looking at the momentum, to me, even if we ignore trying to identify the inverted head and shoulder pattern, and what I'm talking about is like you see this green line, that's the left shoulder. You got the head right here, which is influenced by this gap. And then you got the right shoulder. And we've been playing to that. You know what I'm saying? Like, yes, the market has dipped, but every dip down has literally been a push back up. You know what I'm saying? And I think this move is the breakaway. What I was looking at this two ways, like this whole thing two ways, where the inverted head and shoulder is, or maybe we still got to see it play out. It still has to carry itself out, but I think that we're pretty safe on believing that this is a bull move that's going to carry on, right? So I was looking at it like it could this could just be consolidation on a higher time frame or range, you know what I'm saying? So I did have fears of I wouldn't say fears. I did have concerns that the market could come back to 41 like point 0.3 to try to create support because that would definitely be. But this just looks like a swing low. You know what I'm saying? Like I mean, a swing high. Yeah, I said that right. Swing low. This is like a swing low in order to bring the market up. So this is what we're seeing. I mean, there's really nothing to talk about. It's just all about not getting caught up in mess like this where we were previously at. If you look at this on the 8 hour time frame, damn. I mean, we still made our moves. This stuff wasn't bad like on the smaller time frame. It's just that you would rather not be in it. You would rather be at the end with what we're seeing right now. So that's what I'm looking forward to. Hope everybody's in profit with what they've been doing, analyzing the charts correctly. Like even if you've been taken out, the market's been giving you plays back. So that's all I got for our live trading segment today, traders. So I will see everybody next week, and obviously I'll drop our weekly review just to discuss how the market panned out because I do want to see it break high. What I am looking for is for US 30 to go up to like 43 250 is what I want to see at first. And then the next area I want to see is 43 280. So if we can get that this week, awesome. If not, those are my targets for if we get this breakout of this consolidation for the coming week. So again, like just manage the market properly. Just execute. Don't try to take the money. Emphasize that. Take the money, traders. Take the money. Get an opportunity to jump back in. You see, this market is really coming back for people. It's not really going nowhere yet. But when it is gone, you know what I'm saying? That's where, you're gonna have to lock in as a trader. So this is Antoine Farrar signing out. I will see everybody on our next video with Digital Goatz Academy. Peace.